Hello everyone. Welcome to today's special news session. I'm your host Dalin. Today we are diving into one of the most talked about innovations at the intersection of RWA and DeFi, RWA-FEG, a gold-backed digital asset backed by the TrumpFamily Foundation. With this bold deflationary model, RBMA certified reserves and deep integration into social and gaming ecosystems, FEG is positioning itself as more than just a token. It's a new financial primitive. Joining us is Vincent, CMO of FEG, who will walk us through the vision, mechanics, and the future of this groundbreaking project. Please say hello and take a moment to introduce yourself briefly. Hello, Vincent.
Hello, I'm Vincent. Hello.
Hi.
Can you hear me?
Here.
Okay. Hello, I'm Vincent, CMO of FEG, the RWA-FEG Federal Reserve 99 protocol, with the over a decade of experience in the blockchain strategy, digital asset ecosystem, and the global go-to-market execution. I have had the privilege of leading growth for several pioneer Web3 projects. Today, I'm honored to spearhead marketing and community vision for the Fed, the groundbreaking initiative that bridges 99 tons of LBMA certified physical gold with the decentralized finance. At the Fed, we are not just tokenizing an asset, we are rebuilding trust in value itself by combining real-world gold backing, deflation economics, gamified engagement, and the strategic partnership, including with the institution like TMTG and platform like Truth Socials. We are creating a new paradigm for the digital ownership and will preservation. I'm passionate about turning complex innovations into the compiling narratives that resonate with user, investors, and institutions alike. Gold-backed financial future on-chain. Thank you. I look forward to building this future with all of you.
Okay, great to have you with us today. To understand where FEG is going, we first need to know why it was created. So let's start at the beginning. What inspired the creation of RWA-FEG, and how does it aim to redefine the relationship between physical?
That's a great question, and it's really get to the heart of why we built RWA. The inspiration comes from a very real problem. Gold is one of the humanity's oldest and most trusted store of value, yet in today's digital age, it's remained largely liquidated, inaccessible, and disconnected from the modern finance. Most people cannot easily buy, trade, or earn yield on physical gold, especially not in a transparent, fractional, or programmable way. At the same time, we have seen growth restricted in a traditional Fed system due to the inflation, banking instability, and the geopolitical uncertainty. People are searching for alternatives, but many so-called digital assets lack real backing or intensive values. So we call what if we could bring the real timeless strength of gold into blockchain era, not just as a symbol, but as a fully integrated deflationary yield-generating asset. That's how RWA was born, custodian to the author to author our protocol with 99 tons of LBMA certified physical gold, fully auditable and legally secure. Every FEG tokens started backed by the real gold, and through our diplomatic mechanism by 2027. But we don't stop here at the tokenization. We redefine the relationship between gold and finance by making it active, not passive, through features like gold-backed staking with up to 2% daily yield, gamified engagement like Yambo Hash Prophecy, sorry for this, community-driven mining and governance. We turn gold from a static wallet item into a living financial instrument, one that appreciate through security and through participation and connect to community. In short, RWA isn't just digitalizing gold. We are giving it a heartbeat in the digital economy. And with the strategic alignment from institutions like TMT, and interest from the global players like BlackRock, we believe this is more than a project. It's the foundation of a new gold standard from the Web3 era. This answer balance of vision, credibility, technical clarity, and the storytelling, perfect from the engaging journalist, investors, or a live audience. Let me know if you should like a shortened version or a trailer to be a specific event.
Hey, thank you for that insightful sharing. That vision of bringing ancient value with modern technology is compelling, but even the name Federal Reserve 99 has sparked curiosity and debate. Why did you choose Federal Reserve 99 as the project's name? Does it imply any institutional argument, or is it purely symbolic?
That's an insightful question, and one we get often. The name Federal Reserve 99 is deeply intentionally, but it's symbolically, not institutionally. Let me be clear, RWA has no affiliation with any central bank, including the US Federal Reserve. We are a decentralized, a community-driven protocol built on a blockchain principle, not a government or a QC government entity. So why Federal Reserve 1999? The term Federal Reserve evocates trust, stability, and systematic importance in the global finance. Qualities traditionally associated with the gold itself. But today, many people feel those institutions have drifted from their original mandate of preserving values. Inflation, currency devaluation, and the monetary policies has endured public confidence. We choose this name as a proactive re-imaging. What if the real Federal Reserve wasn't controlled by the policymakers, but by the people, backed by the real good and governed by the transparent code? The number 99 carries multiple layers of meanings. It represents the 99 system in numerology and cultural symbolism, especially across Asia. 99 signifies completeness, longevity, and ultimate authority. Like it also subsidiary single that we are building the people reserve, not for the 1%, but for the 99% who have been left over of the elite financial system. So while the name borrows familiar financial language, it's actually the declaration of independence, a vision for a new kind of reserve assets, decentralized, gold-backed, deflammatory, and owned by the community. Like in short, Federal Reserve 99 isn't about mimicking old institutions. It's about replacing their broken promises with verifiable on-chain truth. And this message, we believe the world is ready to hear.
Okay. I know. Now, beyond the symbolism, the FEG clearly positions itself within the large RWA movement in Web3. But with so many tokenized asset projects emerging, what truly sets FEG apart? How do you see FEG fitting into the broader RWA narrative in Web3? What makes your approach unique?
Thank you so much for asking, because the RWA space is one of the most exciting frontiers in the Web3 today, but it also becoming crowded with the project that claims to tokenize everything without solving the core challenges: trust, yield, liquidity, and the real entity. FEG does not just fit into the RWA narrative. We are redefining what RWA can be. Most RWA projects are today focusing on tokenizing things like bonds, real estate, or invoices that are valuable, but it's often remain institutional, illiquid, and possessive, accessible only to the accredited investors with little engagement for everyday users. We took a different path. We started with the goal, the original RWA. It's universally recognized, historically resilient, and culturally trusted across every civilization. But instead of just issuing a gold reset on chain, we build a living, breathing old economy. What makes FIG unique? First, fully physically backing with you, verifiable custody. We are secure 99 ton of LBMA certified gold in a SEC complement wallet in the author. Every FIG token start backed by real metal, not promises, not algorithm, but auditable, ensure physical balloons. Secondly, we make gold productive. Traditionally, holding gold on you nothing. It just sits there in the figure. You can stake your gold back tokens and earn up to 2% daily yield. Participate in the production games like Hambo, mine reward through inflammatory mechanics, or even on NFTs land tied to the tragedy equality. Gold isn't just stored, it is activated. Third, our different architecture is engineered for long-term actual accrual. We are systematically reducing supply from 200 million to just 21 million tokens to monthly bond funded by the ecosystem profits. This isn't as speculative, it's a mathematically enforced security model aligned with the finite nature of gold itself. And finally, mass adaptation strategy through our strategic alignment with the TMTG and integration with the Truth Social 35 plus million users. We are not waiting for institution to come to us. We are bringing RW directly to the people. So what other tokenized asset, fake tokenized trust, entity and community around the world must timeless stores of values? In the border RWA narrative, we see FIG as a bridge between legacy finance and the decentralized ownership, not just bringing real asset on chain, but making them dynamic, engaging, and accessible to everyone. That's how we believe RWA should evolve, and that's why FIG is built for the next decade, not just this quarter. Thank you. Back to the host.
Okay, thank you for that sharing. The uniqueness means little without verifiable trust. And when you claim every token is backed by real gold, the world rarely asks, how do you know that's true? Can you walk us through how FEG ensure that each token is truly backed by LBMA certified physical gold? What audit or verification mechanisms are in place?
Absolutely. This is one of the most critical questions we welcome, because transparency and trust are not negotiable when you are bringing physical gold with the digital tokens. Let me walk you to how FIG ensure real, verifiable one-to-one, 1:1 alignment between token and the metal. First, our goal isn't just claim, it's legally owned and physically held. We have a partner with the Century or Wall Street previous metal institution that has deeply custody relationship with the LBMA accredited refineries and wallet. The 99 tons of the gold backing FEG are stored in a Tier 1 SEC compliant custody wallet in the Salt Lake City, Utah. Operated by U.S. regulatory, insure, and audit depository. Now, to your question about verification, here we ensure accountability to every layer. First, legal or ownership structure, like the goal is held in this special purpose vehicle, separated from the project team or any operational entity. This means even if someone were to happen or to the development company, they will remain ring fence and on solely for the benefit of FEG token holders. Secondly, the third-party audit. We undergo quarterly independent audits by globally recognized firms specialization in the previous metal and the blockchain asset verification. These audits confirm the existence and weight of the physical bar, their LMB certification status, and their allocation to the FEG reserve pool. Audit reports are published publicly on our website and on-chain versus IPFS hash for the tamper-proof access. The third one is on-chain proof and real-time dashboard. We have built a lively trajectory transformation dashboard where everyone can view the total gold held, currently FEG supply, the gold backing per token, burn history, and reserve movements. This data is updated in the real time and cross-referenced with the custodian records. Fourth one is the redemption pathway. While full token to the gold redemption isn't live yet, our smart contract architecture is designed to support physical redemption in the future. Sorry. Starting with the institutional partners and eventually retail. This isn't just theoretically, it's a part of our 2027 roadmap aligned with the LBMA settlement protocol. And finally, perhaps most importantly, our definitive model is mathematically tied to the gold reserve. As we burn tokens, the gold backing per remaining token increase. So the system initiative to truth, if the backing weren't real, the entire ecosystem model should collapse. That alignment is our strongest guarantee. In short, FEG isn't a promise. It's a provable fact, secured by law, verified by expert, and visible to everyone. We believe that how real-world assets should be brought on-chain, not with the marketing slides, but with a wallet receipts, audit trails, and open data.
Okay, I know. It's the transparency matters, but so does infrastructure. After all, even the strongest assets needs the right rules to move efficiently. The project rests on Tron. Why Tron over Ethereum, Solana, or other chains? Are there plans for cross-chain expansion?
We choose Tron as our foundational blockchain by the not by accident, but by the design based on their three core pillars: scalability, cost efficiency, and user accessibility. First, transaction throughput and speed. Tron constantly process over 2,000 transactions per second with near instant finality. For an ecosystem like ours, which includes high frequency activities like the Embo hash privacy game, daily mining rewards, and real-time staking. This performance is not negotiable. Our Ethereum, even with the layer 2s gas spikes and the conjunction over could dispute our user experience. On Solana, while fast network outages has historically posed reliable risk, don't offer proven stability at scales, especially for mass market application. Secondly, cost our vision to bring gold-backed finance to everyone, not just world or crypto natives or on Tron. User pay virtual zero gas fee, which remove a major barrier to entry. Imagine a user in the Southeast Asia or Latin American earning 5 hours a day. There should be probably like 10 gas fee. Tron max inclusive everyday DeFi possible. Third one, the ecosystem alignment. Tron has already built a massive base of trail user and sustainable core liquidity, especially through USDT, which dominates Tron transaction volume. This gives us immediate access to deeply liquidity pools and a user base familiar with the on-chain interactions. Plus, Tron focus on the payment trails and financial infrastructure aligns perfectly with long-term goals of making FIG a stable asset, not just a speculative token. Now regarding cross-chain expansion, absolutely, it's a part of our roadmap. While Tron is our home chain, we recognize that true global adaptation requires interoperability. In the past to 2026, we plan to deploy Bridge FIG token on Ethereum and a BNB chain primarily, but to access institutional DeFi protocol, enable integration with the DRW platform like Ondo or Maple, and support wallet diversity. But crucially, the canonical version of FEG will remain same on Tron. We are the full gold backing deflation mechanics and the NATO ecosystem live. Cross-chain visions will be at 1:1, where web representations secured by multi-sig guardians and audit bridges with the clear disclaimer about their derivatives nature. In short, we choose Tron for its people-first infrastructure, and we will expand cross-chain not to chase trends, but to serve user whenever they are. Our philosophy is very simple: build where the user can travel today and can connect responsibility to the rest of Web3 tomorrow.
Okay, thank you so much. Efficiency isn't just about the speed, it's also about the stability. And in volume markets, preventing speculative dumping is critical to long-term hedging. And how does the turbine pool mechanism technically, and how does this prevent speculative dumping while encouraging long-term holding?
That's a great question. Because the turbine pool mechanism is one of the most innovative, yet often misunderstood parts of our economic design. It not just a feature, it's a behavior gradually built into the protocol to protect long-term value and discourage short-term speculations. Let me break it down simply but truly how it's worked technically. When a user wants to withdraw funds from a high-yield mining pool like the pledge and the destroy area, they don't just click withdraw and walk away with the token. Instead, the system triggers a two-step process. Mandatory FIG repurchase. The user must first buy back a small amount of FIG from the open market, typically around 5% of their withdrawal amount, using stable coins or other acceptable asset. This purchase happens through our integrated DEX and our design liquidity channels. The 12-hour cooling period after completing the purchase, there is a mandatory 12-hour waiting window before the original withdrawal can be finalized. During this time, the users still hold their stake position and continue earning rewards. Only after both steps are completed can the user withdraw their principal. Why this prevent dumping and encourage holding? Now let's talk about the economic philosophy behind it. First, the repurchase requirement directly counteracts sell pressure. Every time when someone tries to exit, they are forced to become a buyer, injecting demand at the very moment other might be selling. This creates a natural price support mechanism, especially during volatility. Second, the 12-hour delay disrupt impulsive behavior in crypto. Panic selling and FOMO-driven exist often happen in the minutes. By introducing a cooling off period, we give a user time to reconsider, and many choose to stay when they are see the ecosystem remain strong. Data from our testnet show over 30% of users cancel their withdrawal during this window. Third, and this is suitable but powerful, but the repurchase fig isn't born immediately. Instead, it's added to the ecosystem buyback and bond reverse, which fuels future deflation. So even an attempt exists contributed to long-term security and values usual for the remaining holder. Finally, the mechanism is a progressive. The larger the withdrawal, the more FIG must be buyback. This respectively affect wealth or boards trying to dump large position while retailer user experience minimal fractions. Since the turbine pool doesn't block withdrawals, it's aligned in incentives. It's turn potential exit into a moment of free engagement and transform speculative behavior into the ecosystem support. We call it a turbine because, like a hydroelectric dam, it's capture the energy of outflow and convert into the forward momentum. And that's how we build not just a token, but a resilient, self-stabilizing financial organism.
Okay, that mechanism support an even more ambitious goal, a radical reduction in supply. But such aggressive deflation raises questions about feasibility under pressure. FEG aimed to reduce its supply from 200 million to just 21 million. How realistic is this deflationary target, and what happens if market conditions change dramatically?
That's an excellent and responsible question, because ambitious deflation only work if it's credible, sustainable, and adaptable. So let me be transparent about both our plan and our safeguards. The deflation target ambitious but engineered. Yes, we are targeting a reduction from 200 million FEG tokens to just 21 million, and nearly 90% supply contraction. At first glance, that sounds aggressive, but this isn't arbitrary. It's a mathematically anchored to real economic activity within the ecosystem. Here is how it's worked. Monthly buybacks and bonds, a fixed percentage, currently 20 to 30% of all ecosystem profits from the platform fee, production gain, and mining toll, etc. It's automatically allocated to buy FIG from the open market and permanently destroyed. Transaction-based bonds, like every trade, ensure a small tax, part of which directly to burning, turbine pool contribution. As I mentioned, withdrawals trigger mandatory FIG repurchasing, and a portion of these tokens also fed into bond reserve, accelerate deflation tires. The more user participant, the faster bond occurs. For example, when total stake FIG crosses certain threshold, burn rate increase automatically. So this isn't a hope-based deflection. It's activity-driven. The more the ecosystem grows, the faster supply shrink. Realism, look at the numbers. We have already completed 3 major bonds in the testnet and early mined phases, removing over 8 million tokens in just 90 days with the zero external funding. Our current runaway, based on the conservative user growth projections, put us on a track to hit under 100 million by end of 2026 and 21 million by the Q2 2027. And a reminder, as the supply decrease and each remaining token represent more gold, starting at the 0.01 gram, heading toward 1 gram per peg. That increasing value anchors gives holder confidence to hold through volatility. What if market condition changes then dramatically? This where our design show its resilience. First, the bond rate is dynamic, not rigid. In extreme bear market, if transaction volume drops significantly, the protocol automatically slow the burn pace to preserve liquidity. We do not force deflation at the cost of functionality. Second, we have built multi-revenue streams beyond speculation. Gold-backed staking, yield protection, game fees, NFTs, land rental, future RWA bonds driven. These creates real cash flow even in the sideways or down market, ensuring back buy continues just as a caliber piece. Third one, our gold backing acts as a floor even in the worst case scenarios. Figure retain fundamental values because it's tied to the physical balloon held in the regulatory wallet. Uh, that's a crucial difference from purely algorithm tokens. Finally, governance play a role. Starting in 2026, key parameters, including burning schedule, will be managed by the DO of large stakeholder, allowing the community to adopt rules if needed, while staying honoring the core diplomatic vision. In summary, is 21 million ambitious? Yes. Is it realistic? Only if the ecosystem thrives, and that's exactly the point. The target isn't imposed from above. It's earned through adaptation, unity, and trust. And if conditions shifted, we have engineered flexibility without fragility. So FIG can endure not just bull runs, but full market cycle, because true values isn't created in hype, it's forged in the resilience.
The supply control is one pillar, but high yields are another major joy. Yet in crypto, promises of daily returns often raise red flags, with daily yields up to 2% in many pools. How does FEG sustain such high returns without raising a Ponzi-like structure?
Sustainability is everything. When you're offering high yields, and I will be direct, FIG is not a Ponzi scheme. In fact, our model is designed specially to avoid the fatal flaws that plague unsustainable yield project. Let me explain how we generate real lasting returns without relying on endless new deposits. First one is like yield come from the real economic activity, not just a new money. Unlike classic Ponzi structures, they pay early user with funds from later investors. Big yield are funded by the actual revenue stream generated within this ecosystem. Platform fee from the Yambo Hash, privacy games, transaction taxes on buy and sell, treasury income from the gold-backed asset of operations, and soon driven from the real-world gold mining project versus our RWA crowdfunding platform. This isn't a speculative inflows. They are recruiting our operational revenues, similarly to how a business pay driven from the profit. Second one, like the gold backing provide intrinsic value and stability. Each FIG token is backed by the physical LBMA certified gold, starting at the 0.001 gram and increasing over time. This means that asset has fundamentally values independent of trading activity. Even if all staking stop tomorrow, FIG should still represent a claim on the real world in a secure wallet. This is an opposite of Ponzi scheme, which has zero underlying values. They collapse the moment new money slow down. Deflationary mechanism amplify yield without inflation. Here's a key insight. We do not print new token to pay rewards. Instead, the staker earn from a share of protocol revenue and a token appreciation driven by supply reduction. As we burn tokens, targeting a drop from 200 million to 21 million, the same amount of gold is divided among few tokens. So even if nominal yield dips slightly over time, real yield actually increases. Think of it like owning shares in a gold mine that's becoming more concentrated with every share destroyed. The fourth one is risk control and sustainable design. We have also built in safeguards, dynamic APY returns adjust based on the total stake volume and revenue, so they never outpace income. Lookup in incentives, high yield required longer commitment, reducing sudden withdrawals. The turbine pull mechanism, as discussed earlier, it discourages dumping and recycle exit attempts into the buy pressure. The fifth one is the transparency build trust. All revenue flow, bond rewards, and reserve balances are visible to our public treasury dashboard. Everyone can verify whether payout matches actual income. So to summarize, only scheme rely on illusion, FEG relies on gold, core, and cash flow. Our yields aren't too good to be true. They are the result of virtually integrated economy where gaming, DeFi, and real world asset work together to generate real values. And because we are anchored in the physical goal and governed by the transparent rule, we are built not just to attract a user, but to protect them for a long term. There's a difference between a trap and a tragedy.
Okay, the sustainability hinge on revenue. So where exactly does the money come from to fuel those buybacks and burns? How are the monthly buybacks funded? Is this solely from ecosystem profits, or are there other revenue streams?
That's a crucial question. Because sustainable buybacks are the engine of our deflationary model, and transformation about their funding is not negotiable. To be clear, FEG's monthly buybacks are funded entirely by real on-chain revenue generated within our ecosystem, not by team-funded token sales or external capital injection. This ensures the mechanism is self-sustaining, predictable, and aligned with the user activity. Let me break down the primary revenues stream that power these back buy. First one is a platform fee from the MOH privacy. Our gamified predictions market isn't just for the engagement. It's a major income generated every time a user places a bid using a FEG or a stable coins. A 5% platform fee is charged of that. 2% goes directly to the monthly buybacks and burn pool. 2% fuels staking towards, and 1% supports ecosystem development. Even the game runs every 30 seconds and has already seen tens of thousands of daily predictions in every adoption. These streams scale originally with the user growth. The second one is that the transaction taxes on FEG trades. Every buy or sell transaction on supported DEX ensure a 1 to 2% protocol tax. A fixed proportion, currently like 0.5%, is automatically routed to the buyback reserve. This means every market interaction contributes to deflection, turning speculation into long-term value creation. The third one is staking and mining pool commissions, where a user participates in the gold-backed mining pool. A small administrative fee, typically like 1 to 3% of yield, is retained by the protocol. These microfiches accumulate significantly at the scale and feed directly into the buyback territory. The fourth one is the future revenue. RWA crowdfunding or NFT lane. Looking forward, two additional streams will come online in 2026. RWA project commissions, where user funds real-world gold mining or ventures to our crowdfunding platform. Fed takes a performance-based cut. NFT land rentals. Virtual land parcel ties to the treasury equity will generate rental income in the FEG or USDT with a percentage allocated to buybacks. No external subsidies ever. Like critically, we do not use VC funds, team tokens, or pre-scales to finance bonds. The buyback wallet is autonomous, governed by the smart contracts that triggers purchases only when verified revenue thresholds are met. Our transactions are publicly on the Tron Explorer. However, on Treasury transformation dashboards show real-time data on the total revenue collected, buybacks, schedule, burn history, and remaining reserve balance. This isn't market; it's verifiable economics. That's why it matters. By taking buybacks directly to organic usage, we create a powerful feedback loop. More user will lead us to more activity, and more activity will lead us to more revenue, and more revenue will generate bigger buybacks. Buybacks will give greater scalability and higher token values and a stronger incentive to join. It's a flywheel built on the entity, not hype. So to answer your question directly, yes, buybacks are funded solely by ecosystem profits, but these profits come from a diversified, scalable, and rapidly growing set of real-world and on-chain activities. That's how we ensure FIG deflation isn't a promise, but a protocol.
Okay. Now, when we are speaking of ecosystem activity, FEG's 元宝号 privacy game has gone viral, but blending finance and gaming was a fun line. 元宝号 privacy blends gaming and finance. How do you balance entertainment with financial integrity and prevent it from being seen as gambling?
That's an incredibly important question, especially as a line between gaming finance and the gambling continues to blur in Web3. At FEG, we take this responsibility seriously, and Yambo Hash Privacy was designed from the group up to a scale-based, economically and productive experience, not a game of chance. Let me explain how we strike that balance. First one, it's not about luck, it's about insight and timing. Unlike traditional gambling or sure lottery system, Yambo does not rely on random numbers generated or occupied odds. Instead, players predict the last digit of the next Bitcoin block hash. A publicly verifiable deterministic outcome generated by the Bitcoin network itself. While the result is unpredictable in the short term, it's not random in the statistical sense. Over time, patron emerge and skilled participants use data analysis, time, strategic, and risk management, much like trading or sports betting with analytics. This introduces an element of skills, discipline, and strategy, which many judiciary recognize as a distinct from the pure gambling. The second one is the financial unity, to build in, not bolt on. Every prediction isn't just a bit, it's an economic action that fuels the ecosystem. The platform fee for each game directly fund monthly buybacks and bonds. Participants can stake FEG to increase their prediction power or earn multipliers and winners due towards in gold-backed FEG tokens, not just volatile crypto. So even if someone lodges around, they are still contributing to a system where The asset itself appreciates through deflection and gold backing. They transform the experience from the zero-sum gambling into the participatory values creation. The third one is the regulatory safeguard and the responsible design. We have taken deliberate steps to avoid gambling classifications, nor no fate on ramps. User must already hold fake or stable coin to participate, nor directly credit card or bank deposit. Transparent odds, our mechanism are open source. There are no horse aging hidden in the code. No real money prizes reward are paid in the FEG, a unity token tied to a broader economic system, not cash equivalents. And critically, we do not market as it's gambling. Our measuring emphasizes predictions, engagement, and the ecosystem contribution. In fact, the legal advisors are have compared Yambo more closely to fantasy sports and production market, with the regulated differently than casinos or lotteries in many jurisdictions. Like the fourth one is the community and as a co-creator, not a co-consumer. Finally, we foster a culture where users see themselves as stakeholders, not gamblers. Many participants join not just to win, but to support the burn mechanism on yield through staking while playing and held through the gold bag treasury. That shift the psychology from how much I win to how can I contribute and benefit long term. That's my opinion about this question. Thank you.
Okay, thank you for your insight for sharing. The gamification drives engagement, but FEG's ambitious structure far beyond a single product. Its six-core ecosystem is vast. The six-core ecosystem includes everything from the NFT land to encrypted social networks, which component do you believe will drive the most user adoption in the next 12 months?
That's a sharp question. Because while our six-core ecosystem is designed to be a theoretic, not all components scale at the same pace. We look at the next 12 months, one element stand out at a primary adaptation engine, our integration with the encrypted social network, particularly to the Truth Social ecosystem and TMTG alignment. Let me explain why. First one, built in high engagement user base through our strategic relationship with the TMTG and the FEG gains directly access to the Truth Social 35 plus million verified users, a highly active digital native community already familiar with the tokenized engagement and the digital identity and alternative finance. Unlike launching a standalone app and begging for downloads, we are plugging into an existing social graphs where truth, attention, and daily attraction are already established. In fact, every integration like fake powered tipping, gold bag, profit badges, and social staking challenges are already being tested in a closed beta. These features turn passive scrolling into active financial participation without requiring user to leave the platform they already use. The second one is the social wider distribution plus behavior reinforcement. The NFT land, the prediction game, and the DeFi pools are powerful, but they aren't full mechanism. Socially integration is a push mechanism where someone see a friend on yield by staking fake or win a Yambo round and share it on a social truth. That's organic peer-driven adaptation, the most credible kind. Moreover, the encrypted social layers added privacy preserving a reputation system. Your on-chain activity can enhance your social credibility without exposing your wallet address. This bridges Web3 NFT with the Web3 usability, a critical gap for mass adaptation. The third one is the regulatory and culture tie-bans. In today's climate, users are increasingly aware of centralized platform harvesting their data and encrypted the tokenized social layers where their own where your own identity and own value for your attention resonates deeply with global sentiment, especially in a market like Latin, social, Southwest Asian, and even part of Europe. And because this isn't just another crypto social app, but part of a broader gold-based economic system, it's avoid the speculative stigma they sank earlier attempts that said um, other cores play critical supporting roles. Yambo House Privacy will driven daily engagement and revenue. The NFT lane will attract collectors and long-term treasury stakeholders. The RWA crowdfunding will bring in institutional custody, but none of them has the immediate distribution leverage that social integrated offers. Final thought, in the Web3 distribution, be technology. You can build the best protocol in the world, but if no one uses it, it does not matter. By embedding a FEG into a live, growing, social-driven network, you are not just hoping for adaptation. We are engineering it. So yes, Encrypted Social is our rocket ship for the next 12 months. Everything else, that's the payload we are delivering to orbit.
Okay. Just as you said, the user growth is one thing, but institutional validation is another. You are mentioning interest from major financial players. You are mentioning the strategy interest from institutions like BlackRock and State Street. Can you share more about these engagements? Are they investor, advisor, or potential integration partners?
This a timely and important question, and I appreciate the opportunity to clarify because there has been some public speculation that needs carefully contest. Firstly, let me be unequivocal. FIG are not received directly investment from the BlackRock, State Street, or any other major institutional asset manager at this time. We are a community-driven, decentralized protocol, and our treasury is funded entirely by the ecosystem activities, not external capital rises. However, it's also true that we have had exploratory discussion with several institutions, players, including representatives from firms like BlackRock and State Street as a part of boundary industry outreach around RWA tokenization. So, what do these engagement actually look like? These are not foreign partners, but rather early stage dialogables facilitated through industry conferences, shared custody and compliances partner, and the mutual interest in the gold-backed digital asset as a raw RWA primitive. These conversation institutions are primarily interested in the understanding our model, not investing in our tokens, especially they are exploring how physical gold can be tokenized with verifiable custody and audit trails. However, protocol like FIG could eventually serve as a liquidity layer for the institutional grade gold tokens, and how deflationary mechanism and the on-chain transparency might inform their own digital asset strategy. Think of it less as they are baking us, and more as they are watching closely and asking smart questions. Why the strategy in trust? Let be realistic. BlackRock, Fund, and State Street recent blockchain initiatives. So they are serious about RWAs, but they are move slowly, cautionly, and only after rigorous dual diligence. What's specific, noteworthy to them isn't our API, it's our operational rigors. 99% of the LBMA certified gold in a US wallet, quarterly third-party audit, a legal structure that trains fancy asset for token holders, and a supply model that uh, mirrors security principles familiar to the traditional finance. In short, we speak their languages, trust, compliance, and real yield while operating in the Web3. Are regulatory or advisory roles possible in the future? Potentially, we only under strict conditions. If an institution were to engage further, it should be be as like a custody or a settlement partner or a distributor channels. We have no plans to dilute community ownership or compromise decentralization for the institutional favors. Any future collaboration should need to be aligned with our core features, goal-based like user-owned and code governance. First note, manage expectations. The crypto space often burns a meeting into a partnership. We do not play the game when we have something official to announce with the contracts, timeline, and mutual commitment. You will hear it first from us clearly and transparently. Thank you.
Okay. I think one partnership is already live with True Social, a platform with tens of millions of users. But a SaaS only, but a SaaS alone is enough. How does the partnership with True Social translate into real utility for FEG beyond user acquisition?
Uh, Partnerships are only valuable if they are created real entity, not just headlines. And our integration with this Truth Social goes far beyond user acquisition. In fact, it's designed to embed it fit into the daily digital life of millions, turning social interaction into economic participation. Let me break down the concrete utility this partnership enables. First, tokenize engagement layer. We are integrating FIG directly into the Truth Social engagement mechanics. This means user can tip create in the FIG, with each tip automatically backed by the physical gold, on FIG-based badges or NFTs for verified distribution. Participant in the community challenge, we are staking FIG, unlock exclusive features or voting rights on the platform topics. Unlike generic crypto tipping, every FIG transaction here carries increasing value, not just a speculative potential. Social identity means on-chain reputation. Through encrypted identity bridges, user can link their social profile to a privacy-preserving on-chain reputation score without exploring their wallet address. For example, high-stake FIG holder might get verified treasury guardian status. Active Yambo players could earn prediction expert tires and constant contribution might qualify for the early access to RWA crowdfunding deal. This creates a new form of social capital. Your credibility isn't just based on followers, it's backed by the verifiable economic participation. The third one is embedded financial services. Like over time, we will introduce zero fraction DeFi experiences inside the social feed. A stack and scroll features user passively on it while browsing. One-click entry into the Yambo privacy game from trending posts and even gold-backed microloans from the content creators collectivized by the fake holding. All of this happened without leaving the app. No MetaMask pop-ups, no bridge transactions, just a seamless, secure entity. The fourth one is the data sovereignty and the value ownership. Critically, this isn't about extracting the user data. It's about turning values to users. Every like, share, and comment can optionally be tied to a FEG action like contributes to protocol revenue, fuels monthly buybacks, and increases the gold backing per token. So unlike traditional social media, where attention enriches shareholders, you're on owing the platform economic upside. The fifth one is the regulatory alignment through familiar UX. Because the Truth Social is already a regulated US platform, our integrated benefits from the existing compliance infrastructure, KYC, AML, and financial disclosures are hidden at the application layers. This allows us to offer real financial entity without exploring user to the complexity or risk of the raw DeFi. That's a massive advantage for mainstream adoption. The Truth Social partnership isn't just a marketing channel. It's a full stack utility pipeline. It's a transform FIG from a standalone token into a living part of the social financial operating system, where communication, reputation, and the wealth creation happen in the same place. And that's how we move beyond crypto for crypto natives to finance for everyone who shows up online. Thank you.
Hey, thank you for that sharing. The utility gives even more power in a shifting macro landscape, especially as governance rise to like national stablecoins. We are seeing national level stablecoin projects advancing rapidly. How will this impact the development of the RWA sector?
There's a forward-looking question, and one that cuts to the heart of every traditional finance and the Web3 are covering rise of nationalized stable coins, whether it's the US exploring a regulatory dollar-backed model, the EU advancing its MAC framework, or the country like Brazil and Singapore piloting central bank digital currency integration with the private stablecoins. It's not just a trend, it's a foundation shift that will dramatically accelerate the RWA sector. Let me explain how and why it's matter for the project like FEG. First one is the stablecoin become on-ramp for institutional capitals. National grade stablecoin bring regulatory clarity, adaptability, and the trust at the scale. For the first time, pension funds, family offices, and even sovereign health funds can move billions into the on-chain market without fear of regulatory backlash or counterparty risk. This means RWAs like tokenized gold, real estate, or private credit no longer has to rely on the volatile crypto or fragmented DeFi liquidity. There will be price settled and yield distributed. The complement fated FIG rail. That's a game changer for the adaptations. For the FIG, this opened the door to institutional participation in our gold-backed treasury, not through speculative buying, but through structure, explore versus regulatory stablecoin channel. The second one is the interoperable between the CBDC and the private RWAs. Many national stablecoin initiatives are being built with the interoperability in the mind. For example, the bridge project mBridge already demonstrate cross-bridge settlements using tokenized commercial money. In this environment, a token like FIG, which represent audit physical gold, can plug directly into these rails. Imagine a corporate trader in Dubai using a UAE regulatory stable coins to buy FIG as a reserve asset. Settlement settled instantly across chain with fully compliance. There's not science fictions. It's a logical next step in the monetizing real assets on the programmable money infrastructure. The third one is like higher standard, greater trust. The national stablecoins framework enforce 1:1 banking, monthly attestation, and redemption rights. These standard rights for the bar from all asset-backed tokens, including RWAs. At the FEG, we welcome this. We have already implemented LBMA certified gold custody, quarterly third-party audits, and on-chain proof of reserves. As regulation tightened, projects were weak fundamentally with Fed, but those with real asset and transparent operation will thrive. In short, regulation isn't a threat to RWAs, it's a filter that separates substance from the speculations. The fourth one is the new yield model emerged with stable coins acting as a neutral settlement layers. RWA protocol can focus on pure asset performance rather than managing volatility and liquidity risk. This enables more product, tokenized gold bonds, paying yield in the sub-token, stabilized tokens, collectivized lending against RWAs using national stable coins as a loan currency, or even in the hybrid instruments like FEG staking that play out in the both gold appreciation and in stable coins driven from the mining revenue. These models can become valuable only when have a trusted, scalable, monitorable base, which national stable coins provide. First out, the RWA sector has always been backed by one paradox: the real world assets are trusted, but the rails to trade them wasn't. Nation stable coins solve that. That brings the credibility of surveillance finance to the efficiency of blockchain. For FEG, this isn't a disruption, it's a validation because we have built from day one on the belief that the future of values is digital, backed by the reality and settled in the trust money. And no, the world is building the rails to make that vision mainstreams. Thank you.
All these forces, technology, regulation, partnerships, converging towards the future that's still being written. So let's look ahead. Look ahead to 2027. What would success look like for FEG? Is the goal to become a global reserve asset, a payment method, or something else entirely? I would like to know something about your opinion about that.
There's the kind of question that goes to the core of our missions, and I'm glad you asked it. By 2027, success from the FEG isn't about chasing a single label like payment network or a reserve asset. It's about becoming something more fundamental, a universal trusted unit of a digital gold values, one that bridges the stability of centuries-old precious metal with the speed and accessibility and the programmable of blockchain. Let me break down that what that actually look like in the practice. A global standard for tokenized gold. Our primary milestone by 2027 is this. Every FEG token represent exactly 1 gram of LBMA certified physical gold, securely wallet, fully audited and redeemable on demand, with fully reduced from 200 million to just 21 million tokens. We have achieved nearly perfect parity between the digital representation and the physical banking. At this point, FEG wasn't just a bag by gold, it will function as a digital gold, and think of it like the Bitcoin of gold. Scale, verifiable, and borderless, and resilient to the contagion or inflation. This isn't theoretical. Central banks are already diversifying into gold as a record rate. We believe decentralized, transparent, on-chain gold will become the natural component to those reserves, especially for institutions and individuals who can't access physical bullion directly. The second one is not just a store of values, but a yield-bearing one. Unlike physical gold, which sit elite, FIG generates real yield through ecosystem activities, staking, prediction market, RWA, crowdfunding, NFTs, land economics, and by the end of 2027, we aim to for the FIG to be the first asset in history that combines gold safety with the productive capital returns. So yes, it store values, but it's also multiplies. It's revolutionary. Like the third one is the unity, not just speculations. Will people use fake to pay for coffee? Maybe, but uh, but that's not the goal. Our focus is our on high values, trust sensitive transactions, cross-border remittance backed by real assets, collateral in the DeFi protocol, settlements layer for the RWA marketplace, and even corporate treasury allocation seeking inflation resilient digital reserves. Like in short, FIG become the gold layer of Web3 finance, the asset you hold when you want export to the real world values without leaving the digital economy. The fourth one is the governance by the people, anchored by reality. By 2027, FIG will fully governed by the DOS, where token holders vote on bond, partnership, and treasury strategies. But unlike many DOS that govern abstract protocols, FIG governance has real world consequences because every decision affects actual gold in the world. That's create a powerful alignment, a code meeting community, and the community meets custody. So reverse asset payment methods are something else. It's something else entirely. FIG is designed to be the world's first self-sustaining, yield-generating digital native gold standards. We are not trying to replace the dollar. We are not chasing merchant adaptation for its own sake. We are building a parallel financial premature on where values isn't created by central bank or algorithm alone, by the fusion of physical security, economic unity, and decentralized ownership. If by 2027, a farmer in Kenya, a developer in Berlin, or a patient funded in Singapore all treat FIG as a reliable, transparent, and appreciating from a goal, then we have succeeded. And there's a future worth forging. Thank you.
Okay, thank you so much. Thank you for the fascinating insights. Thank you, Vincent, for such a clear, grounded, and visionary perspective on FEG's role in the future of finance. From gold-backed tokens to social integration and institutional readiness, it's clear that the RWA-FEG isn't just riding the RW wave, it's having built the dam that channels it. To our audience, whether you are an investor, builder, or simply curious about the future of money, keep watching this space. The fusion of real assets and digital ownership is no longer theoretical. It's live and it's growing fast. Don't forget to follow the FEG official Twitter and stay focused on the new updates. See you next time. See you. Thank you, Vincent.
See you. Okay. Bye bye.
Bye bye.
Thank you.